Hey guys, let's roll. Big week ahead. We're talking about the week beginning Monday, the 26th of February and ending March 1st, 2024. Still quite a number of companies reporting earnings. In this video, we're going to lay out the plan of action. Now, this is a general plan of action. It will pay to actually tune in the day of some of these earnings reports because we may be releasing a more detailed video. But the best way is always to trade this with a 13 market move coach. Don't attempt to go in as far as entries and exits on your own. There's a lot more detail that you should know before attempting these trades on your own. So this is a general game plan for this week, something you should know as far as the economic data before we dive into all these different ticker symbols is the PCE report, which is 8:30 on Thursday. Guys, this is a huge report, personal consumption number. Okay, this could be moving the market, and this is the day you'd want to be ready, set up your account for trading options on futures. Make sure that you don't miss Thursday. Thursday is going to be a killer day. And as you know, at times the market will sell off into an event. So we could potentially see a move 6 on a Wednesday, the day before the release of the PCE number on Thursday morning. So very interesting market heading into this week. A ton of divergences, bear divergences. This is, as a matter of fact, if we're to assign a number, which you know from 13 market moves, 13 moves, they're actual 13 market variations of 13 patterns that could come up on any given trading day. And so it gives you a lot of insight as how to trade these earnings. So as I'm going through this, I will assign a number. Now, I don't have the time to go in depth and explain all 13 market moves in this video. For that reason, we have a fucking 20-hour course where you can go in and do this and learn all the moves on your own. But basically, it is a much more in-depth way of looking at the market instead of just saying whether something is going to go higher or lower. Okay, when you assign a pattern to an outcome and you understand how does that pattern evolve, you have a much better way of trading the stock in this particular case that's announcing earnings. For example, if you were to study the history of Domino's, okay, on many instances, it will make a move 4. A move 4 basically where initially a stock is going to gap down and then it's going to rock to the moon. Now, you should also know that a move 2 is the second most frequent move for Domino's Pizza. So in other words, if Domino's Pizza bounces after the report, there is an overwhelming probability that it will reverse and lose some of those gains. Now, in the move 4 formation, it's actually the opposite, right? It gaps down and then it works its way higher through the rest of the trading session. So if it gaps down initially and then bounces, the trend is most likely going to be intact for the rest of the trading session. And oftentimes it will give up some of those gains on the second day after the earnings report. So understanding basically what numeric pattern we assign gives you an overall trading pattern to which you could stick with and actually make sure that you're not jumping out at the wrong pivotal moments throughout the trading session. Most of the traders, they trade just the open, so let's say from 9:30 to 10 a.m. because that's where they believe the biggest move is going to happen, which is not necessarily true, depending on exactly which pattern you will get from a move 1 to move 13. And so understanding the pattern itself is allowing you to stay with the bigger move. So not just capturing little bits and pieces that you could possibly catch, making a few $100 at the open, okay? I mean, anybody can do that. But going to where your trade goes 5x, 10x, 20x, okay, it requires understanding the bigger move and the pattern of that move and the time frames of that move that allow you to get better entries and exits. So also for those of you that are trading these from the perspective, okay, well, I want to buy options ahead of the earnings report, some of these patterns clearly would communicate to you. So for example, if it's a move 4, you would be better off buying options ahead of the earnings report on the put side and after the earnings report, you're better collecting the profits and switching to calls. So basically, a numerical number tells you exactly what the fuck is going to happen. Okay, now they're not going to be 100% precise, but we arrive with these numbers based off the numbers, based off the sequence of the move, based off the historic patterns. For example, as I mentioned in dominoes here, take a look at that example. A lot of times it's going to be number one prevalent move for dominoes is a move 4. The second best move to trade on dominoes is a move 2. So we're going to be focusing on these two moves. Now, some stocks, depending on the chart pattern, right? So we take the moves, we take the chart pattern, like the overall weekly chart pattern or the daily chart pattern that gives you a longer time frame view of the chart. So considering on that, on LI, when that reports earning, we're just expecting a straight move 3. Which a move 3 is very different from a move 4 in the way that in a move 4, the stock gaps down and then everyone's buying the dip and it recovers to the upside. And the move 3, it never recovers. It could have a bounce, but that gives you an entry on the short side. Okay, so as we go through all of these stickers, okay, I will outline the number of the move that we're looking to trade here at 13 market moves. Now, for example, some of the stocks, if we're to look at, let's say, VEEV, that's going to report Thursday on the 29th. There's basically 4 trading days before the stock is even going to go into its earnings report. So a lot of these patterns could change. When I'm talking about the patterns, I'm not talking about the move we're trading, but the actual chart of the stock going into the earnings report. So for example, if they buy a stock like Zscaler for 4 days in a row, well, the stock could go into their earnings report 20-30 points higher from the point when I'm recording this, which is February 25th. So we got 4 more trading days in some of these names before they report. So clearly it would make sense to refresh those charts on Thursday for specific strike price, for specific levels, for specific. So basically on some of these stocks, the data that we have now, it's going to be 3 to 4 days short, or at least a couple of days, at least 1 day, right? So, but on some of these like DPZ, yes, it's tomorrow morning. We're expecting a high probability of a move 4. Second probability is going to be a move 2 on that. On LI, we just straight up, it's a move 3. BGNE, it's a Chinese stock. It's not necessarily, it's not confirmed it's reporting earnings, but if we were to trade this, okay, it's going to be a gap down, bounce, and a further drop. So BGNE, that's an easy trade if it does indeed report earnings tomorrow. Now, Workday, moving on here with specifics. Workday normally, historically, does exactly what the stock of PANW. And you know, we've nailed that 75 to 105x trade on the drop on PANW. And this is just an observation. They're both in the technology sector, but PANW is in the security sector. This is more like a cloud. But for whatever reason, they have a very high correlation of doing almost the same thing. If one stock gaps down, the other one does the same. If one stock is a move 4, it does the same. But we've seen nothing on PNW but a straight move 3. So we're expecting this stock, based on multiple quarters, to also do the same, repeat what PNW stock did. Now, PNW crashed more than 30%. We're not saying that Workday shares will crash 30%. What we're saying is a high probability of a move 3 formation on Workday. So basically, this would be the stock on which you would be buying, puts ahead of the earnings report an expectation of a gap down. And when the stock gaps down, okay, you don't freak out like, oh my God, they're gonna buy it up. Okay, you go with what basically the highest probability of the correlation is. If it bounces, you short the bounce. Now, Zoom, okay, it's basically Zoom, just like any other COVID play, okay? These stocks, they cannot catch a break. It started last week with like Twilio, okay, where we saw a very highly bullish pattern on Twilio, and I made a call to go bullish on that, and that was a big big disappointment because despite of a great report, the stock just tanked. And anything since then, it just continues dropping. Like Etsy was a high-flying name during COVID. Any high-flying COVID name just doesn't do in current market environment. So there's a strong correlation between these names. For example, another high flyer during COVID was Roku. Remember that, Roku at 400. Well, shit, Roku was complete toilet. I mean, the stock is down 80% since COVID levels, right? So anything like a high flyer like Zoom, we're not expecting it to do well during current market environment and conditions based off the number of stocks from a similar sector that were absolutely outstanding during COVID. They're not doing well now. Absolutely not. So Zoom, it's another move 3. Now, potentially Zoom could do a move 4, but overall, guys, it's a straight shot. It should get down. AZO, now this one historically has got like a probability of above 90% of a move 4 formation. So you stay with a higher probability, you trade a move 4 on AZO. Smarkers, SGM. Basically this one, guys, here, it's a straight shot, move 3 based off the chart pattern right now. Lows, guys, we've seen what Home Depot did. Home Depot did a move 4 last week, so there's a high probability outcome of lows following that and basically staging a move 4 formation. That's what we would be trading. Splunk, I've got it on the list, but Cisco basically entered an acquisition agreement at $157 a share. I would just be listening to these earnings reports, so we're not trading this, guys. But it's on our radar because I really want to see, I mean, how bad things are for the cyberspace, because the cyberspace has been so hyped up, but, you know, so hyped up that, hey, it's at the very, very fucking top. When a stock like PANW, Palo Alto, can drop over 30% in one trading session, okay, because of a poor forward guidance. I mean, let's see what this company is going to have to say. Maybe if we get a similar message from Splunk, okay, things are not, okay, things are nowhere as good, basically, in that case, as everyone thinks they are for the cybersecurity sector. And everyone's been so fucking bullish on it. So could it also mean that all the hype in the AI is also misguided and mispriced to the point of complete absurdity? And so this is why I would be watching Splunk to get some messages between the lines of how really people are off on value in these stocks. And on valuation, I don't talk about PE. Nothing moves based off PE since 1999, right? But yet some people still use PE. You shouldn't even be looking at PE as a trader, right? But you should be looking at overall what the sentiment is, where they're getting things wrong. You should be focusing on these behavioral patterns. But when it comes to actual trading your entries and exits, you should be focusing on cut out all the noise, just focus on a number 4, 3, 2, a behavioral pattern, right? A chart pattern that evolves throughout the day. That's how you're going to nail these trades. But stuff like Splunk, you got to tune in, you got to listen to what they're saying, because it could give you some interesting insight to what could be happening with some of these other stocks that's been overhyped. FSLR, guys, that's an easy one, okay? We've had a little bit of a mix on some of the solar stocks. Solar stocks are total dog shit now, but they've been total dog shit for like almost 2 years, where we've nailed some of the best trades in 2023 on shorting solar stocks when FSLR was above 220. I mean, now, last week we've been shorting FSLR, and it's been dropping every day. The issue is it has been dropping by a great magnitude of a move on each day. So instead of potentially making 10x trades on the solar stocks, they basically stalled. So depending on whether you had a really good strike, you made 3 to 5x. But if you had an out of the money strike and expectation of no move expansion, then those strikes didn't do shit. So what I would say, a message to anyone looking to trade FSLR would be to go at the money puts, okay? And the world is a disaster when it comes to solid stocks, and they're already down by so much, but this is the one that has not dropped as much as a lot of other stocks. So we're signing an easy gap down on this one, okay? But there is a distinction because we've seen SEDG last week, for example, the stock drops 24%, and then at the open, it doesn't do nothing. It just goes. They're starting to buy the dip on it a little bit. Now, the stock is still ends up down on the day of the earnings report, down 12%. Okay, but overall, it's still a move 3 on the CDG from last week. But what we've had on another stock, ENPH, it collapses and then they buy it. So out of this message, out of this description I just given you, we had 2 high-profile stocks, not to mention little bullshit stocks like Run, right? Ticker RUN. That stock was in the doghouse last week and just continued dropping after the earnings report. But depending on how big the initial drop is in FSLR, okay, at the open, it would make sense to collect profits because there is a possibility of them trying to run it higher after the initial drop. So basically, at this point, okay, I may post a video on Tuesday or Wednesday morning going through the levels. Okay, because to make this decision, whether it's a move 3 or 4 and how you should proceed from there, you should look at the levels. You should look at the overall chart of FSLR. Well, a couple of years ago, we posted a video on FSLR telling you to buy it at like 117, 120. Actually, what is it? 117. We're telling you to buy 120 calls. It finally breaks out above 120. I remember posting a video saying, hey, this could be like the type of stock that could do some crazy like Tesla, to where it's just going to keep going fucking higher and higher and higher. And so the market is dropping at the time I'm posting all these bullish videos on FSLR. The stock goes exponentially higher. Like the stock basically doubles while the rest of the market is dropping. But since then, we've reversed on all solid stocks into puts, right? So it's been, what I'm saying here, it's been one of the most resilient solid stocks, and simply probably because of the fact it does a lot of commercial solar instead of stocks like SEDG, which collapsed overall by more than 20% last week. That stock, SEDG, does a lot of private homes, individual buyers, that sort of thing. And so that's where the interest rates come in play. And of course, it hurts their revenues exponentially. But overall, FSLR is just in a sector that I would call it Titanic. Despite of all these stocks, SEDG, ENPH, they've crashed by 80% since we began shorting them. And this one is only down 50%. So if you're looking on a relative basis, then it makes sense that FSLR could still be the stock in the solid sector that could drop by the most in terms of percentages or points. So, but there is clearly a level. The reason I stated, hey, at one point we got really bullish on the stock at 117, 120. So basically it trades around 143-ish as of Friday. So we don't know whether they're going to keep selling it. So basically, one thing we don't know, we're one trading day away from understanding exactly at which number First Solar will go into the earnings report. But let's say it goes into the earnings report at 145 or 135. The next major key level would be 120. And so that's how you would look at it and say, okay, if it's hitting 120 on the move 3, which basically means when you wake up Wednesday morning, the stock is already trading at 120, okay, then yes, they're going to try to hold that level. And then from there, there's a high probability of a move 4 higher, okay? But if the stock is like, hey, it goes into the report at 145, and then on the day of the report, it's only going down to like 137. Chances are there's still going to be more selling, and so in that case, you go with a move 3. Okay, so understanding the levels and the sequences and how they could evolve and picking out the right move. So look, basically you use 13 market moves to just narrow down what is your highest probability move. And in some stocks it's going to be clear, hey, we're only trading a move 3 here. But considering we have a lot of background information, or I would call it context information on solid stocks, where ENPH after 30% collapse, it goes exponentially higher, okay? And so now clearly they're selling the hell out of ENPH again, but that's why you may want to, if FSLR gaps down initially, check the level to where it gaps down, and that's how you make your decision whether you should enter, whether you should exit the trade, or whether you should enter more puts on the bounce if it's a move 3. So this is a lengthy explanation. I figured I'd just pick one stock and break it down thoroughly for you. And if you still have questions about it, guys, go to 13mmtv.com, schedule a call to talk to a senior trader here, and ask any questions about this, whatever possibly is still not clear in your mind. But if it's for the reason that you simply don't understand what move corresponds to what pattern in 13 market moves curriculum, all you got to do, guys, just, you don't even need to talk to a coach. You go to 13mmtv.com, you buy 13 market moves course, you sit down on the weekend, you study the hell out of it, and then boom, you will be ready to understand. Look, it really is a beautiful system. Those people that take the time to learn it, it's just most of the people, they just, they don't see when it comes to trading options, they don't see how many variations of things are really there in the market. And the only way to beat the market is by eliminating the noise. There's so much fucking noise out there. So if you focus on too many things and you don't just focus on, okay, I'm trading a move 4 on this stock today, okay, then the chances are you're going to make 3 simple mistakes. Number 1, you're going to be over-influenced by what everybody else is saying out there that day of the earnings on the stock. Chances are, if you were bearish and now you're watching the news and everybody else is bullish on it, you're like, oh my God, they're going to buy the dip, and you jump out of the perfect trade that is going to collapse another 20, 30 points that day, but you're already out. So you've collected $500 on a trade you should have collected $15,000 on, okay? And all of that, basically, if you're focusing on anything besides a numerical pattern, at some point you will get too fucking emotional, okay? You're going to be sitting there, oh my God, now I'm making 5,000. Leo, should I take it? What should I do? Oh, wow. And so, if you haven't made $5,000, on a single trade, then you're probably going to jump out and say, fuck, I'm going to collect the gains at 5K on a trade that potentially could have made $50,000 for you that day. So understanding the pattern is very important. Understanding the context, the levels, all of that stuff is incredibly important, guys. So, for example, if we look at the stock of Allegiant, guys, this is a solid move 3. Okay, AXON, guys. See, I've already looked for these charts, and I'm going to review some of these charts with you guys. But if you're working with a 13 market moves coach, guys, you have a perfect way to communicate with your coach. Say, hey, coach, I'm looking at this chart. Okay, what are we looking at here? Why do we see that this is a high probability move? So that's the advantage, okay? You gain so much more experience by working with a coach and understanding the trade rather than just simply, oh, it's going to go higher, it's going to go lower. There's a lot more to it when you trade in weekly options, especially when trading short-term options expiration. So AXON, beautiful chart, move 3, okay? CHE, this one is a bit of a tough one right here, guys. I think this one could actually be a move 4. BECN, okay, this one is a move 4. CVLT, this is a straight up 3. Okay, Baidu, Okay, you're going to get a similar action to what you've gotten out of BABA, which BABA was a straight up 2 move. So on Baidu, we're looking for a move 2. TJX, guys, the stock, if it pops, okay, in a move 2 formation, it always sells off. So looking to trade a move 2 on TJX, which also would be very consistent with the pattern that Walmart has given us. A very solid trade last week, guys. When Walmart bounced to 161, we bought 155 strike puts, and those puts we were buying for 50 cents throughout the trading session. Guys, throughout the trading session, okay, they went 4.5x just from that trading session. We didn't hold it for more than 2 days, but it was an easy trade. And I think TJX could, as far as the points, as far as the percentage move, TJX always makes a much bigger move than Walmart. So this could be, I mean, when you're making 4.5x on a turtle like Walmart, I mean, TGX, you can double your trade, possibly you could be anywhere from 9x to 13x on TGX if you catch a perfect entry on a move 2. Now, BLD, that's just, I mean, the stock is way out there. I mean, it doesn't look like SMCI yet, but it's getting pretty fucking close to it. So the question is, this earnings report, is everyone going to be asleep thinking it's going to go nowhere but higher again? Or can we get a PA and W out of that? I would say the latter would be the case. We're trading a move 3 on BLD. CRM, the chart is total trash. The chart is just, it's a 3. Snow, that is an interesting one because look, Snow used to be a high-flying name at like 300 plus. 340. I remember shorting it, posting videos how we began shorting it at 340, and it's been such a great short for us. I mean, maybe if you've been following the channel for a while, maybe you've been trading with me. Personally, I remember trading with a bunch of guys where it basically drops from 300 to like 230, 232 just in one trading session. So something for you to know about Snow. It was way overhyped just a couple of years ago, and I think this is a stock based off the way they have been buying it. This is a stock that at least temporarily could make a comeback. So yes, I almost sound bullish on this one. Yeah, I mean, Leo, holy shit, you got 3s everywhere, man. Wow. No, so I think Snow could actually be a green day after the earnings report, and if by any chance it does gap down and there's no volume on the gap down, definitely trading a move 4 on this one. So Monster, MNST, I think it's going to be a monster percentage move lower. It's a 3. Jazz, not expecting, actually probably just going to watch till the stock reports earnings. It's down quite a bit. It's a biotechnology stock. It is capable of bigger size move, but based on the chart, there's not like an overwhelming case to go bear a bull there, so we're just going to wait out on this. MARA, you know, we're highly bearish on all the Bitcoin-related stuff right now after this last leg higher. So I'll be looking for trading a move 2 formation, similar to what we had on Coin, right? So Coin first bounces like crazy, and then it loses. Like if you lose it, if you look at the chart of Coin, it basically hits almost 200 after the earnings report, like 190 it goes, and then it's back to the 160s. So MARA is not like, I mean, it's not a pricey stock like this, but there is a big percentage drop, especially if the stock bounces first. So MSTR, same pattern, right? It bounces and then it drops like crazy. So it's just reference to the last weeks of trade and not reference to the MSTR earnings report, because MSTR earnings report was a move 4. But we give more relevance to the way the Bitcoin related stuff has been traded lately, and lately, you know, Bitcoin stocks have already voiced where Bitcoin is going next. So next move in Bitcoin is lower That's why you see such strong reversal on coin. That's why you see such strong reversal on MSTR. So potentially, if you get a bounce, this could be a quick and easy trade. Okta used to be a pretty popular stock in the last couple of years, but lately just can't catch a break. I don't see a huge trade on Okta, okay? But historically, I will tell you, historically, it's a move to type stock. Basically, in 90% of instances, if it goes higher, okay, in the initial reaction, it will sell off. So, but it used to be, we used to trade it when the stock was in like 140s, and now it's like 70. So it's not a whole lot of meat on this one, but it could be an easy trade. So you watch it after the earnings report. If the stock is up, you short it at 9:30. So like Thursday, that's how you trade it. Easy. NTES, that's a gaming company out of China, and recently it's got hit pretty hard. Like in the last 30 days, it had a major drop. Used to be a $300, $400 stock before it did that stupid stock split, and that just took a lot of trading opportunities out of it. So not looking for a huge trade here, but again, as in case with BABA, if this one shoots up, it's a move to basically short the bounce. ARGX, that's they do like cancer development, top drugs, and this one has been a real high flyer recently. Over the course of last year, but in the last 6 months, it had 3 major gap downs. And so you get some major gap downs in a biotechnology stock, not like in stock like Netflix. How many times Netflix has 3 gap downs and then boom, it reverses and then it can make 3 gap ups? Well, in this one, I'd be very, very careful at the levels it's trading. I think on this one, it's a straight 3 shot. And we're going to get another gap down here. ADSK, stock looks like total shit as far as the chart concerned. So looking for a move 3 or 4 on this one. VEEV, that one's coming back from ashes in this stock around the earnings. I mean, this is amazing thing about this VEEV stock is every time it beats on earnings. Every time it beats on revenues. Every time it beats on guidance. And every fucking time the shit drops. Like, it's just like one of these stocks, like how, same shit happens every fucking time. But after it drops, okay, after it drops on the report, okay, don't be shocked. This stock is like, it could do this. It's going to be like this. It's going to be dropping. And then the next fucking moment it's going to do this. So this is always a great trade for us here at 13 Market Moves, because if you catch your entry on this one, oh boy, it's going to look like shit is collapsing. You go in, you buy calls on this. Within fucking minutes, you could be up 10x. So this is always a great stock to trade, okay? But again, in most of the instances, it will produce a move 4. Zscaler. Well, Zscaler, like if it keeps running, like last 3 days, the stock's been up. But we got 4 more days till the report. So we don't know if it's if they're gonna still buy it 4 more days in a row. If they are, that's a beauty. Oh man, that's gonna be such a big drop if they keep pumping it for 4 more days. This is gonna be an easy trade here. Recently, it had a history of sharp sell-offs to the point, decent point size, like 10, 20 points on a $200 stock that will get you paid with options. So if they keep pumping it, which the last 3 days of the stock moving higher after a major gap down, I mean, it's a setup to short the bounce. So, and they're driving the stock higher at this point on very, very low volume, very low vol. So, to finish this off with COOO, guys, this stock on earnings, shit, it has not dropped on an earnings report in more than 2.5 years. So, you bet on the highest probability. I mean, it seems like it doesn't matter what the fuck this company does, it always goes higher after the earnings report. Now, I will warn you on this one, it trades on low vol. So to make money on this, when you're buying options, your options are always going to be, they're going to, these options are tough to buy, meaning the day after the earnings report, when you're trying to get a fill, there's going to be a big mismatch between the bid and the ask. There's going to be a big fluctuation. You could see like a bid at 2.2 and an ask at like 5.9. So what do you do in this case? Well, you bid it somewhere at the mid or somewhere higher than the mid in hopes of getting a decent fill. But you got to be quick, right? Because it could be like the bid is 2.2 to ask is 5.9, and the next fucking 10 minutes shit is worth $15. So don't sit there and wait too long. If you can get filled at like $3-4, you get in, because you could be up instantly 3-4x within minutes. And initially what it does, it begins dropping on low volume. And it looks like, oh man, did something bad happen? Why are they selling it, right? And then it's kind of like VEEV, right? It's just, so the highest probability and the best trade that you can get out of this is trading a move 4, okay? Unless the pattern of 2.5 years where the stock can just do absolutely nothing wrong, unless that's broken, okay, then you're heading for a straight 3. But considering the outcomes that we've compiled over the last 2.5 years on this one, it's going to be a move 4, guys. So look, if you have any questions, and you're probably, the biggest question should be, Leo, like, okay, I get it, these are, so the 4 are actually bullish moves, but they begin with a gap down. The 3s are actually bearish moves, and the 2 are bearish moves that initiate with a gap up. So yes, so it may seem like, oh, Leo, this is so bearish, this is so bearish. This is not bearish, because got about equal number of moves on the bullish side that resolve to the bullish side, I should say. And we got an equal number of moves that don't resolve to the bullish side. So, I mean, a lot of it depends on the behavioral patterns, but overall, the predominant pattern here is after the earnings report, the initial move in majority of these is lower. So understanding that positions you to buy, to make a decision of when you buy options. I hope that makes sense. So like if you knew for a fact that there was a 70% probability outcome that a stock you were considering taking a trade on was going to gap down tomorrow, okay, would you buy puts, or would you wait, or would you, what the fuck would you do? Clearly, you'd go ahead and buy puts ahead of the earnings report if you had a 70% probability outcome that something was going to drop. Now, the only reason you would want to stay out of the trade is the second part of the equation. You need to understand, well, by how much, right? And then the only way you can put together a huge trade by buying options ahead of the earnings report if there is an element of surprise. So for example, options are going to be priced elevated. They're going to be elevated in relation to the normal options pricing because there is an expectation of a bigger move. But market prices the options, or let's say the market is based on people who want to sell you options. The market is also based on people who want to buy these options. Well, if somebody's expecting a 20-point move lower in a stock, okay, and then they think, okay, it's not going to go lower than $20, it's going to move higher, that's the person that still wants to sell your put option because they know, like, hey, they can catch some premium, they're going to collect money on the premium, and then the next day, maybe the stock initially is going to drop after hours, and then by the time the market opens, the stock is going to be up, or it's not going to be down by as much, and so the person that sells you the option, they're going to collect the premium, right? But to be on the safe side, they don't want to sell you that put option $20 out of the money for nothing, right? Let's say they're highly bullish, they want to sell you that option, but what's the point of selling that option? There's still risk. So based off these things, okay, how much risk am I willing to take here in order to sell you this put option, okay, most of the market participants that are selling options to you, they're gonna want some kind of decent reward. They don't want to do it for nothing. They want to do it for profit. So for that reason, since around earnings, the chances of a bigger move are elevated, options are going to be priced higher. But also for that reason, the market kind of figures out, okay, well, this stock can move by this much, this stock can move by this much, so there is an expected move. There is an expected move already baked in. So you will never make big money with options buying them ahead of the earnings report if all you're going to get after the earnings report is the expected move. So basically, if the expected move is 20 points, all right, and indeed you get a 20-point drop, you're not going to make any fucking money on puts. And the person that just sold you the option, they're not going to make any fucking money. Okay, so if the expected happens, nobody makes any fucking money. So the way you make money with options around earnings is if you have a real case to believe that the move is going to be greater than currently is priced in, greater than currently is expected by the market participants. So in the event of PANW from last week, well, the expected move was $24 on a $366 stock. So when I was looking at the option chain, I'm like, fuck, what's going on here? Like, nobody thinks this stock can move. Historically, PNW is the stock that can move at 10%, which would be $36 already. So you got to catch those moments where market expectations are lower than normal. Nobody fucking thought PNW, it's cybersecurity. Oh shit, no, that thing cannot fucking drop. And the big, like, it was priced in for a $24 drop. Instead, you're getting a 104-point drop. So that's when it makes sense when you have like, okay, well, they're definitely missing something here. We know it's going to be a move 3. Okay, so let's spread now these strikes between different strike prices. So we went with 350s, 325s, 300s, guys. We're going for 20, 30 cents. That's what we were buying them for. And then we were selling them for $30 fucking the next day. So that's the beautiful part of understanding, okay, so here's a stock that could make an outsized move. Here's a move that market expects, okay? And guys, by the way, it's very easy to figure out what is the expected move. It's on the option chain. So if you don't know how to figure out the expected market move during earnings, guys, give us a call. Talk to a coach. Go to 13mmtv.com, schedule a coaching call. 20 minutes, absolutely free, don't cost you nothing. And figure out, like, you can call us today. So, guys, we're 24/7 at 13 Market Moves. There's always somebody you can talk to. So always somebody trading here, always somebody trading the futures market, currencies market, okay, commodities market, foreign markets. I mean, we're trading it all. Crypto markets, guys. I mean, trading never stops here at 13 Market Moves, okay? So if you want to understand maybe some markets that you've never traded, maybe you want to understand some details of how to be more profitable with the things you're doing. Maybe you're making a little bit of money right now, but you're like, man, how do you get a 100x trade? Well, between these numbers that I've scribbled on here, there is a chance of, I'm not sure we'll get 100x. Okay, again, it's got to be an element of surprise, but there is a 30 to 50x trade within these things that I've shown you today. So just the question is, will you be the one to take that trade? But there is a 30 to 50x here. So if the expected move happens, okay, nothing happens. Nothing good happens to the buyer or the seller of the option. If we get an element of surprise, okay, that's where you make money buying options ahead of the earnings report. But the general rule of thumb is this: options, for you to make money on options as a buyer, you have to have some kind of edge. You have to buy those options when options are mispriced. Okay, if everything looks normal in the market, things as usual, okay, it doesn't matter. You're gonna buy calls, you will lose. Because the moment you're gonna buy calls and when things gonna look really fucking bullish, and then here comes the dip, okay, and your stop loss, you're already out of the position right before what? Right before the stock resumes the move higher. But you already took a loss. And then you're looking at like, well, shit, I was right. The stock's going higher. Well, who gives a fuck? Okay, you already took a loss and you're already out of your position. And then after you do that 2 or 3 times at the wrong moments, you're like, fuck it, I'm never trading this stock again. So, guys, it happens to like 99% of the traders. That's why you come to 13 market moves. Because, you know, you eliminate all these emotions, these numerical patterns, 13 numerical patterns, okay, help you break down the market, eliminate all the noise, help you understand when you have a higher probability. Like, for example, on LI, we got to move 3, but the question is that going to be a PANW kind of trade? The answer is no. So if your account is very limited, then you also should understand like, okay, this is the trade I'm actually not going to take because, okay, it's a move 3. Yes, I understand the stock's going to drop. It's going to gap down, but it needs to drop by more than what the market is expecting for you to make a killing on this trade. So it's probably not going to be happening on this one. So if your account is limited, like you don't go and take every single one of these trades. You wait for the big ones. Like, you know, instead of taking LI, you're much better off trading like DPZ on that day. But most of you, if your account is limited, like limited meaning like you're not trading with a few 100,000, you're probably going to be like, but Leo, but DPZ puts or calls, they're so much. They're like, man, it cost me $500-600 per one call a put. Oh, Leo, I'm not, man, my account is not, I don't want to be doing that. And you're going to go buy LI puts or calls, which is probably going to be like 50 cents. Okay, but these puts on LI are not going to make you nowhere as much as DPZ going to make. Sometimes understand this, it's not about how many options you get. Well, clearly you want to make like a few million. You got to have like a sizable position. You cannot make millions with like 1 or 2 contracts. But if you're the guy just trying to build your account, let's say from 10K, you want to build it to 100K or something like that, something easy. Okay, you're much better off trading DPZ and paying $600 for one contract than buying 10 contracts of LI, because one contract on DPZ is going to make you a shitload more money than 10 contracts on LI. So when your account is limited, you got to focus. You got to understand, okay, number one, where our options are mispriced, okay? Which stocks got capacity historically to make an outsized move, okay? And what is going to be the pattern of that move? And you focus on trading that pattern. That's it. So at that point, it doesn't matter which analyst tells you what, how. They could be, look, most of these analysts on CNBC or Bloomberg, okay, they're not even traders. Understand, these guys, they'll buy something and they may hold it for 5 years. So how's that even relevant to you as a day trader or a swing trader? It's not relevant at all. So why even watch all that bullshit, right? It does make sense to watch trading related news for the sake of understanding the sentiment. I mean, how crazy the sentiment runs out there, right? You got 99 analysts going on CNBC, and none of them are bullish. None of them are bearish on NVIDIA, right? None of them are bearish on SMCI. Hey, you may have something there on the short side, okay? Because 99 analysts, I promise you, 99 analysts can't be all fucking right at the same time. It never happens. So you go in and maybe you pay attention to some of the news as far as trying to gain an idea of how elevated or how overpriced or underpriced the sentiment is. And that could be just a bit of an edge, could be a bullet in your chamber to, you know, go for the right type of trade this week. you know? So, but overall, you focus on the charts, you focus on the patterns, you eliminate all the possible patterns, you focus on the one that's got the highest probability. That's what you want to go for. And so, and most of you, when you guys are trading, you're looking at the candles. So if the candles are green, especially if they become overwhelmingly green, it's just a green candle and another green candle, green, like, fuck, you get so emotional. What you're doing is you're buying calls at the worst possible time when shit just looks like, oh my God, it's going to fucking explode, right? It's going to go high. And the same thing when, you know, and that's the moment you should be buying puts. And the same thing when you've seen a sequence of red candles, you're like, well, fuck, that's where I'm going to go buy puts, but that's the worst time to buy it, right? Because I mean, how many move fours do I have on this list this week? I mean, all of these move fours, you're going to see red candle, red candle, red candle, red candle, green. Red candle, green. Red candle, green, 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 green. And that's how you're like, what the fuck just happened? Because you were too focused on the red candles. That's why you lost that trade. So focus on the number. Okay, so behind each one of these numbers again is a pattern. If you understand how to trade that pattern, you have a higher probability of beating the market. And that's how you can put your emotions aside. You focus on a pattern. Okay, and I promise you, once your emotions are out of the way, once you're not paying attention to every fucking numbnuts on TV, okay, who doesn't even look at the chart, okay, who's basically looking at what the fuck he read in Wall Street Journal this morning, and then they go and interview this guy on CNBC. This guy's clueless. He doesn't even trade. He doesn't even have a fucking position. Maybe he buys stocks and holds them fucking forever, but he's clueless about how to trade options. So, like, eliminate all these. There's so many opinions and so many fucking things. As a trader, you gotta have your own fucking opinion. You got to have your own opinion on the market. You got to have your own opinion on the report that you're looking to trade. But more than anything, just narrow it down to a number. Okay, Baidu, I'm trading a move 2. That's it. I'm trading a move 2 pattern. I don't give a fuck what they're saying in the news. I don't give a fuck what does the earnings report says. Okay, because the earnings report and what's in the earnings report is not an indication of how the stock will trade. It's not an indication of how the market will react to the earnings report. Now, these sequences and these numbers and these patterns, okay, they are statistically, in some stocks, occur much more often than in some other stocks around earnings. So if you focus on that, okay, if you focus on a pattern that has a 70% outcome of happening after a stock reports earnings, that's how you beat the fucking stock market, okay? And even with that, you're not going to beat the stock market every day or every trade. So, but this is a much better way to trade, guys. Cut out all your emotions. Cut out all the influencers, bullshit, or TV, or whatever's that, you know, all the chat rooms. What the fuck? Who sits in chat rooms on these fucking things? I mean, I promise you, I never go to any fucking chat rooms or bullshit. I mean, I don't have time for that. I'm too busy fucking trading, okay? When would I ever have time to go and sit somewhere and watch what anybody else says? It's ridiculous. You would be much better off focused on looking at the charts, understanding them, understanding these numerical sequences, and making your own decisions on the market. And to save the learning curve, okay, you can come to 13 Market Moves, okay, and you can get a lot of the experience from the senior traders we got here that has helped people make $1 million plus in the market multiple fucking times. So you want to beat the market 2024, guys, this week could be your week. This week could be the week that you're like, you know what, fuck it, I'm gonna do something different. I'm gonna understand what the fuck is a move 4, what the fuck is a move 2, what is a 3 move, what is a 7 move, okay? I'm gonna get to the bottom of this so I can increase my probability of beating the market. So if you're that guy, guys, 13mmtv.com. If you're that woman, okay, 13mmtv.com. And the fact that if you are a woman, a lady, watching our channel, well, hey, it's got to be a tough cookie because, you know, most of the guys don't even fucking make watching this channel because most of the guys are fucking soft these days. They don't have what it fucking takes, okay, to be a trader. Can't believe how many fucking people, they get scared at the most important moments. They jump out of trades that could have made them millions, okay? So you gotta have this tough skin. You gotta have some tough skin to be with 13 market moves. And if you're a lady, I mean, hey, Jennifer's look, 2 million plus, okay? That's why she's a coach, okay? Does she get every trade right? No, but you know what? She's got it. She understands what these things are. That's how she got to where she is today. So if you cannot say, looking at yourself in the mirror, well, hey, I've started with 10,000, I made $2 million in trading options. If you cannot do that, okay, then I promise you there's still something you can learn about the markets. And that's why I invite you to go to 13mmtv.com, click the big orange button, schedule a call. Like, sometimes those small nuances of, whether you should be entering the trade ahead of the earnings report or after the earnings report, but at what point do you enter it, at 9:31 or 10:15 or 10:52, or do you wait till 2:45? Okay, those things make a huge difference, okay? Whether the same trading idea is going to be successful for you or not. So guys, anyways, huge week ahead. Thursday, PCE, but before we even get there, okay, the charts are screaming for a major drop-off. The charts are screaming for a major drop-off. Don't miss the next video, guys. It's going to be a good one. We're going to look for a bunch of charts of indexes and other things that are happening in the world. So trade like a rock star, trade fearlessly, trade with 13 market moves. Let's roll.
First, distract target. Then block his blind jab. Counter with cross to left cheek. Discombobulate. Dazed, he'll attempt wild haymaker. Employ elbow block. And body shot. Block ferrule left. Weaken right jaw. Now fracture. Break cracked ribs. Traumatize solar plexus. Dislocate jaw entirely.